right, GU, August 27th. This is the trade I took today. We're going to go over together and understand my reasoning, my thought process, and especially my confluences to enter this trade. It's really important that as of now, every time that we're going to be doing a chart breakdown, it's strictly going to be in hindsight. What does hindsight mean? It's with the fully printed chart. The more and more we advance into the project, we'll have maybe some bar replay sessions and especially some live sessions also. For now, let's focus strictly on the actual printed day so you guys can understand the story of GU and especially how I figured the direction and especially how I took the trade. Let's go. Remember, every time that we do an analysis, if example, you wake up for London or you're like me, you wake up for New York, your goal is to understand the story in an intraday perspective, not at the higher time frame or daily, H4 or whatever. We're strictly trading intraday. We can look to the left and see what happens. But for the sake of this example, let's confirm the intraday liquidity and understand what's happening. So inside of Asia, I always start my analysis like maybe around almost the half of Asia, because everything here is pretty irrelevant because these are spread hours. So I usually just start my analysis between half of Asia session. We're strictly gonna have a video about Asia session in the library, but for now, let's just continue and focus on the current day. So as we can see, we have a new structural high. As you can see again with my imbalance indicator, those candles are full. These are engulfing candles. They're pushing the price higher. So we have entry confirmation here. When I put a black line, usually it's because there is an entry confirmation. In this case, we have breakout traders entering. Okay, so their stop losses would be here. That would make total sense, right? Now let's continue. Price comes back, doesn't retest a zone, so that's not really a break and retest valid, so let's ignore that. And now we have also a new breakout area. Clear engulfing candle. You have zero doubts on the way they wanted to enter here because it broke out of Asia. There's an engulfing candle, and especially there's a structure to the left that has been broken. So now this means that we can confirm a stop loss location here. We even have those mini equal lows, but it's important to not over refine. Equal lows is something people misunderstand because they think that literally price will be attracted to those mini wicks here. Okay, we'll go over the equal lows in another video. So for now, let's continue. Price pushes, comes back, and we can see that we kind of retest this zone, right? So we would have the perfect break and retest traders trying to enter here, pushing price higher. There's two types of break and retest traders. There's always the ones that are trying to enter aggressively when price retests this zone, all right? Or they're the ones that are waiting for a new confirmed high, right? So they're more safer traders, and especially they're smarter, okay? But our goal is to notify that in these two cases, even though they enter here or they enter here and that retest, the stop losses would be the same here, okay? So we had the breakout retest traders here entering, and we have the breakout traders here entering also. Now, it's really important that we, for the sake of this example, we also have smart money concept traders entering, but let's remove the duplicate of stop losses to keep the chart clean, if you guys don't mind. Now, it's really important to understand, remember, when price breaks a new structural high, we have to keep in mind, hypothetically again, this is based on my personal experience, my personal analysis, is that in some cases, when traders enter, let's say this here, right? They experience a little bit of drawdown here, and then price pushes. Personally, if I would be a breakout trader, and let's say I would be entering here, my stop loss would be here, and my TP would be here, next the structural point here. When price would come, I confirm my entry after like 1, 2, 3, 4, 20 minutes. Price comes back into drawdown. They enjoy living on the edge, actually, because this strategy is pretty special. But I'm not here to judge. Then price comes back, and personally, I don't know if you guys are the same. When I see a big push like this, and I see a new structural high created, and price is heading to my take profit, I would move my position to break even. This is personally how I do it. This is personally how I think traders do it. So, in my humble opinion, we would have these traders moving to break even here, and price, look how price comes back and wicks here to leave. So in my personal, and even though if it's not here, when price does a new high, it comes back perfectly, and look how it perfectly break even them. Okay, perfect. Let's call it RBE, or retail break even. Okay, I just branded this RBE. So same thing here. When we have breakout traders entering here, retesting that zone, price is pushing higher. Usually when there's a new structural high, like higher high, higher low, higher high, these people often would also move to break even. Again, this is hypothetically based on my experience. You can do your own due diligence on the chart and confirm those behaviors, those retail behaviors. I personally, when I see those wicks and I see those clear engulfing candle, I automatically think about an inducement. When I think about an inducement, it means there's a manipulation in the price. Moving candles fast like this requires a lot of liquidity. So you need to add those two things together to confirm this breakout, this break-even zone. It's not only because price comes back and retouch this zone that they're automatically BE, because in some cases you would induce Asia high, create a relevant breakout structure, and go lower. You need to see the conditions and the behavior of each candles. In this case, we see clearly that price comes back. Look how perfectly it comes back and touches this zone. Again, this is hypothetically the way I see the market. We are just retail traders. We're not the Fed. We are not hedge fund. We're not brokers. We don't have access to the order books, meaning we don't know where the stop losses are located. Our goal is to position ourselves and understand the way they trade to potentially know exactly where the stop losses is. And this is actually what we do on a daily basis. Analyze the liquidity. Okay. So I'm not going to go too much into detail because I'll have other videos to talk about break even. Let me just take a sip. Sorry. Now, price again. Here, imagine they enter here. Their stop loss would be here. Their stop loss is not hit. They push higher. New structural high, right? New structural high also here. Okay. And now would make them a new BE, a new SL here. I'm not gonna cross those stop losses here, just so you guys understand until we get to my entry. Okay. Now price pushes higher. If these people are still in, they're potentially take profit, or if they didn't move to break even, they're still in. It doesn't matter. We're trying to see where the masses enter and not specifically where I think I personally would enter. This is logical. Every single trader look at structure as relevant, as important. So every single push, every single structural high, there is potentially people entering. Okay. Now we have also a new structural high here. Here we have people entering. Okay. And again, if we have people entering here, price almost taps their break even. Their emotions are triggered. Now price does a new structural high. Okay. And maybe these people are done with this kind of hard price action. So they decide also to move to break even. Again, the break even, the RBE that we just labeled, is hypothetically based on my experience. I don't want you guys to say that every single time there's a price retesting a zone, it breaks even them. No, what I see is look at the speed, look at the momentum of those candles coming back into this zone, retesting this zone to go higher, right? They don't do this as like this is made out of purpose. There's a reason why they do it, and it's specifically to close those positions. Because remember, trading is a zero-sum game. So if somebody does $1, somebody needs to lose $1. Those portions of those position open, when they're closed, they are released, and this is why price jumps after. Because look how they push price lower. They close these guys to break even, release the liquidity, and pushes higher. Okay. Again, this is based on my current experience. Okay. Let's continue. Now price heads, and remember when I said when we have an inducement higher, we always look to the left and see what happens. So all right, we have all these equal highs. Okay, haven't done much. Those equal highs hasn't created new lows. So for me, it's kind of not super important, and especially since we already have kind of a lot of things to go get here. We'd like to see at least a little bit higher price action to go get the liquidity here, right? We can see that this point here, based on this, made a new low, right? This point here, based on this, made a new low. There's relevance. This point here made a new low into intraday, but it hasn't made a new low here. There's all these equal lows here still ready to be taken. Okay. So let's continue. Now, what we have is a clear upwards price action, right? Structures are being created to the upside. Upside. And what we have here, how do we call this? Remember? And again, remember that this is in hindsight. It's easy because the price is printed, but our goal is to understand what happens when the price goes into this direction. Every single time that the market switches, that there's a new structural low created, your goal is to identify the reasons why there's a new structural low. So let's go and analyze. we have these people entering here, retesting the zone. Potentially we have break and retest traders entering here. We have also breakout traders entering here. Make it clear like this, right? And now price goes higher. We come back, and now I'm going to start by putting the liquidation of those stop losses. As you can see, price comes back, retests this smart money trap. Why is this a smart money trap? It's simple. There's liquidity below that hasn't been touched yet. And we can check on the left, or what have we reacted from this zone here. Okay. Now price comes back, perfectly triggers this stop loss. As you can see, this is the structural point here. But now what happens? At the same time, they're building downwards sell side liquidity. So this point hasn't made a new low, so there's potentially no liquidity here, but there's in an internal structure, there is liquidity here. Okay. But now what happens when price, this point doesn't do a new low? But if you look at the structural leg, this point has made this structural leg low, and this has been the structural break. So this is what we call, remember, a false break of structure. So if this is a false break of structure here, how this zone is called? Smart money trap. Okay. Let's keep it whatever, like this, so you guys can understand. Now price is building downwards liquidity, and as we can see, here we have that imbalance, the remaining imbalance, because here it has been filled, here it has been filled, here everything has been filled. It's unfortunate that my indicator doesn't remove the color, the blue color, when the imbalance has been filled. But as you can see, this one hasn't been filled, and either this zone here, and price comes and mitigate this zone here. But at the same time, I'm not going to put this because this is too big and it's just going to be ugly. But at the same time, look how we perfectly come and break even these guys here. So these guys hasn't been break even. They got stop loss here, right? Because stop loss location was here. Okay. And these guys are RBE perfectly. And now if we analyze to the left, this point has been break even. So technically, this stop loss is gone. It's not liquidated. It's just there's no more liquidity here because there has been closer to break even. Same thing as in here, here. So these ones are off. This point that pushes higher comes back, new structural high comes back with speed, break even. Based on our analysis, we can confirm that these guys has been taken out also. And now we have this point that push higher. These guys have been break even also. Now these guys push to the new high, right? Can you see it? This is the push that led to the new high. And at the same time, they got break even here perfectly. And now if we understand, a lot of people think that, okay, so we have that inducement to the left. So I'm waiting for that relevant break of structure and then a short. But short to get what? Because there is no more liquidity below based on our understanding and the analysis that we did. Now, everything is done through the M5. Price, when price comes here, I saw that everything has been filled, especially all the liquidity taken. Everybody has been, all the buy side liquidity is out. Now we only have sellers based on these stop losses here. Okay. We fill the imbalance. We trade away. Now we just go on M1. Okay. And this is where I got my entry. You have your final break even. So the break even or the stop loss is taken, both are inducement, because an inducement does two things. It's either inducing and enticing people to enter or taking stop losses out. And as you can see, the last remaining entry point has been taken. Now we wait for a relevant break of structure. How come this is a relevant break of structure and not an internal break of structure? It's simple, because this point led to a new low. So this is a valid structure. And we come back and price just perfectly fills this imbalance. And sorry, this one here. As you can see, my imbalance indicator is here. We fill the imbalance. When price comes here, I waited until it goes lower. I took the entry. Sorry, this is supposed to be here. And then price leaves. At this point, if we go back into our analysis, this is an obstacle, right? So as you can see, price based on this false breaker structure reacts to this zone also, because this made a new structural low here. So this is also a false breaker structure into a false breaker structure, but I'm not going to put this one. So as you can see, we have a reaction. Okay, there's potential another entry here. Now price is pushing higher. Look how, and this is where it's really important for you guys to understand how liquidity works. When you see this indicator that I use, it's not only to see if there is an imbalance, it helps to know if there's an inducement, because look at the engulfing candles, look the speed, how it comes, and they actually take this stop loss, right? Now they come back, they create also new buy side liquidity. Oops. They create new buy side liquidity also here, come back, retest this zone here, but we're not going to do the buy side now, just so you guys to understand. Okay. Now we're taking the sell side liquidity by building new buy side liquidity. And now, if we can see, price pushes. When it goes to this zone here, I usually move to break even. And now, as you can see, we have this reaction of this SMT, or maybe like if we go into the M1, there's potentially something. It's a zone that they're looking for short. Like this is, I think it's a supply zone or a demand. I think it's a supply zone. Anyways, we see how it pushes, how it manipulates them. New people are entering, and look how we have a smart money trap reaction, comes back. We fill the imbalance here, provides with another entry. Then you have your inducement low with this candle pushing with speed, right? Look the speed of that candle. Now you have your irrelevant break of structure again here. Price comes back and mitigate again to just go higher. These are trades that I'm not looking to get involved with because the stop losses are a little bit too big. But this is why I always go into the M1 and see if there's something. And in these cases here, like the decisional here was here, and this one has already been mitigated. I thought that this one was a little bit too tight for me to enter. I just decided to call it a day. I just wait until my take profit is triggered. And everything here has been done ahead of time. The analysis has been done when I got to the computer. And with my current level of skill, I'm able to do this in maybe 5 to 10 minutes to understand the story. Between all the pairs I trade, I think it takes about 25-ish minutes. I trade 9 pairs. So you need to understand that I go to bed around this time here, right? Sometimes. So I can have an idea of what happens in Asia. But when I wake up, the luck that I have, since I wake up around this time here, around here, right? 7 a.m. my time, I have already an idea of everything here. This is why trading in London is a little bit trickier, because you have no idea of what's happening until it happens. And it's harder to understand the behavior and the characteristic of the day without having the printed chart like I have with the luck that I have. So what's important with this day is understand that it's not about looking at structural points to look for liquidity is oh, sorry, I forgot talking about liquidity. I forgot this. It's about looking at where is the remaining liquidity and is there any importance to go back. We have the trend line that I didn't mark here. To go back and take these stop losses when they're far gone from this point. So the notes to take about today's video is 1, understand where the entry points are. 2, understand where the stop losses are. 3, understand when there's a manipulation of the price. As you can see, candles moving fast here. Manipulation equals something is happening. It's either taking liquidity, building more liquidity, enticing people to enter. Your job is to understand, and you have to do your own due diligence to understand what's happening. And this is why I recommend you to install that imbalance indicator, because it's going to be easier for you to identify the pushes with inefficiency. Another thing to understand about liquidity is your goal is not to predict, but like your goal is not to try to convince yourself that these guys has been moved to break even. Add the confluences, add especially the evidences that those break even zones has been triggered. You cannot at any point in time, it doesn't matter which trader you are, nobody likes losing money, right? So when you enter here and price is literally making a super structural high and you're almost at your TP here, there is no way in hell that you don't move your position to break even. And now I'm not saying that there's zero liquidity here because we still have all these equal lows for a future day. I'm just saying for the purpose of this intraday play, there's no more relevance liquidity here. But if you go and you check on M15 now, when you look at the structural leg, people entering here and they enter here and their stop loss because they have a 45 pip stop loss here and they try to push higher price, now it becomes relevant on the higher time frame and the structural leg is important. But we're only strictly trading intraday and our goal is to understand currently on the day where is the liquidity and when is it being triggered or when is it being liquidated. So I hope you guys enjoyed this little clip. I'll try to do more trade breakdowns and actually develop with my thought process. And if there's any question, you guys let me know. Cheers.